Hi, how are you?
Good, thank you. You?
Yes, me too. What we have studied in the last lecture, do you remember?
Yes, hello. We did life cycle.
Okay, target costing and life cycle, yeah?
Yes.
Okay. Is there any question related to the last lecture?
No, it was okay for me.
Any other student?
Okay for me too.
Today we are having one new student. Please introduce yourself.
Hello everyone, I'm Shivani from Mauritius and I'm new today. I don't know how many lectures I've missed. I think I can catch up as a recorded video.
You have not watched the recorded lecture so far?
No, I just got in fact, I just checked my mail for the access.
Okay, okay. I will brief you that how many lectures have gone and then you will watch the recordings. Our today's lecture will be totally independent from the previous lecture, so you need not to worry right now.
Okay, sir.
Okay. We will be starting within a few minutes.
Yes, sir.
Hello students. Shivani, we have gone through the three topics, and there were two lectures on it. The first lecture was the introduction, as well as it covers activity-based costing. So your first lecture will be on the introduction and activity-based costing system. And we covered the topic as well as the kit practice. Then in the next class, we covered life cycle costing and target costing. So there will be two recordings, and you must try to watch those recordings during this week, so that in the next week you will be able to ask questions if there are any. And our today's
Yes, sir.
topic is okay.
I've seen the two video. I will watch it.
Okay. And our today's topic is throughput accounting, which is totally independent from the previous topic, so you need not to worry about it. And this topic is new for all the students, but it will be having a few of the concepts from your previous paper, management accounting, which was F2. You have already studied and hope you have already passed that paper. So there will be only the basic concepts that we will be taking from that subject. Now moving to our today's topic. Throughput accounting is basically the production management technique used to manage the products. This topic will be dealing where we have a bottleneck. A bottleneck means a binding constraint. A binding constraint means anything which limits the activities. For example, if an output needs to go through three processes, let's say process 1, process 2, and process 3. I mean, giving you an example. Let's say there is a product which passes through process 1. We input raw materials in process 1 and we get some output, and after getting that output we need to process it further, and it goes to process 2, and then there is again output, and this output will be treated as input of the process 3, and then we finally get the finished goods. So the product is basically completed in 3 processes. And let's say there is a production capacity, which is in terms of hours. Let's say there are 8 hours per day for each process. So this is your production capacity in terms of hours per day. And let's assume that product requires per unit time 0.5 hour in process 1, 0.25 hours in process 2, and 1.25 hours in process 3. So this is the division of time in processes. Process 1 requires 0.5 hour for completion of its work, and then 0.25 hours is required for completion of the process 2's work, and then 1.25 hours per unit for process 3. If we divide total time with the per unit time, we will get that what is our capacity in units, that how many units can be produced in one day. So if we calculate it, there will be 16 units. It means in one day, process 1 can complete 16 units. Are you getting the points what I am saying? That in one day, process 1 is able to complete its work for 16 units. And if we divide this with this time, it means that this process can complete the task of 32 units. And if we divide it, what will be the answer? 8 divided by 1.25. So how many units can be completed using process 3? Please share your answer in the chat box. 6.45. So it means that we can produce only 6.4 units per day. We cannot complete more than that. Even if the process 1 transfers 16 to process 2 will complete 16 units and transfer to process 3. But the process 3's capacity is only to complete 6.4 units. So this is creating a bottleneck. Bottleneck means limitation. So the process which is having the least production capacity will be treated as a bottleneck process. Do you get the idea how to identify a bottleneck resource? So a bottleneck resource will be a resource which is putting a limit. Is it clear? So the department with the least production capacity will be known as a bottleneck resource or a bottleneck process. Because our units will not be able to complete in one day and there will be blockage. So that's why this is known as the bottleneck. If we look at a bottle, the bottle's neck is narrow. Do you get the idea how to identify the bottleneck process? Please, if there is any confusion, then you may ask, and if it is clear, then let me know in the chat box. Okay. Once we have identified the bottleneck process, now our aim is to use that binding process or a bottleneck process in such a way that we can get maximum returns using or under these limitations. So we came to know that we can only process 6.4 units. Now our aim as an accountant is to maximize our contribution, maximize our profits under these circumstances. So throughput, the word throughput means sales revenue minus material cost. Previously, we have studied the concept of contribution. You might remember that contribution is sale price minus all variable costs. So this was the concept of contribution. But now the concept of throughput says that this is sales price minus material cost. Basically, this method assumes that there is only one variable cost and that is material cost, and rest of the cost including labor, overhead, each and everything is fixed. So basically I link this with the concept of contribution, but this method assumes that there is only one variable cost and which is material. All of the other costs are assumed to be fixed. If we assume that the labor cost is on a fixed salary basis, there will be no hourly basis or piece rate system. So this method of accounting will be followed in a production environment where we have all other costs excluding material are fixed cost. Then we will get the throughput per unit. If this is data has the values of per unit values, then we will get throughput per unit. After getting throughput per unit, we will calculate the throughput per hour, and based on that throughput per hour, we will be able to maximize our contribution or throughput. So let's move to the steps of the throughput accounting. There are 5 steps. The first one is to identify the constraint. So I have made it clear to you that how to identify a constraint. Constraint means a bottleneck. We will find the production capacity of each process. Then the process with the least production capacity will be known as a constraint. So the first step is to identify the constraint. Second step is decide how to exploit the constraint. Exploit mean to get a maximum benefit under this limitation. Subordinate and synchronize everything else to the decisions made in the step 2, and then elevate the performance of the constraint. And then if the constraint has shifted, sometimes if I move to the this example, we came to know that process 3 is a bottleneck resource. Now our aim should be to minimize this, to shift this bottleneck. So we will focus on this, that is there any technology that we can reduce this per unit time, and if we can reduce this per unit time, then we can increase the production. One way to increase the production. Another way is that if other departments are working for 8 hours, is it possible that this department can work for 24 hours in a day? So if the production is can be done in shifts for 24 hours, 8 hours each, there can be arranged a 3-shift staff. So if the production capacity is increased to 24 hours, then we will be able to produce almost 19 units per day. Now if the new result is the 19 units, then which process will be the bottleneck? Now process 1 will become the bottleneck, because process 1 is now only producing 16 units, although in the process 3 now we will be getting 19. So now the process with the least production capacity will be process 1. So this is the point, that if the constraint has shifted during any of the above steps, go back to the step 1. Is it clear? Do you getting the steps, and do you getting the meaning as well? So if we can shift the constraint, then we will again try to exploit that constraint. Then we will be having a new challenges as well. So moving to the next concept, assumptions. So there are certain assumptions, as I told you, that there should be a bottleneck. The main assumption of this topic, throughput accounting, is that there must be one bottleneck at a time. Just in time inventory system, we will not hold inventories, because throughput accounting system assume that holding of an inventory is not an asset. So we need not to hold, we need not to block our funds in inventory. So we assume that there is just in time inventory system. Just in time inventory system means that we will purchase inventory as and when we will require it. All production cost as well as non-production cost are fixed except raw materials. This is the assumption that I have already told you, that all the costs will be fixed excluding materials. So materials will be variable. Work in process is valued only at material cost. So the inventory valuation will be done or at the material cost. This can also be asked in the MCQ as well. And profitability. Traditionally, we measure the profitability as the income, but now in this technique, profitability is measured by the rate. By the rate mean at which speed, how quickly we are selling our goods to satisfy customers. We are not concerned with the dollar figure, that how much we are saving. We are considered with the speed of the delivery, speed of the services to satisfy the customers. So profitability is termed not in the terms of the rate. It is measured by the rate at which the sales are generated, which means that how quickly goods are produced to satisfy the customer. Are you okay with the assumptions as well? So what is the difference between the conventional and throughput accounting? When there was a time that the ACCA was on paper based and there were 5 long questions, almost in every exam, examiner asked for this theoretical area, difference between conventional and throughput accounting. So please read these points in a conventional and throughput accounting. Please read it. Then I will ask you for the queries. I hope the points are clear. If you want to discuss any point, please let me know. Item number 4 in the column of our throughput accounting. So the item number 4 is profit is a function of material cost, total factory cost, and throughput. I will illustrate it with the help of the numeric that profit ultimately will be calculated after having the effect of material cost, factory cost, and throughput. So when we will be calculating the number of units, then we will calculate the throughput, and then ultimately we will calculate the profit. Is it clear? Okay. Now we will be moving to the throughput accounting ratio. But before moving to the throughput accounting ratio, I will take you to the practical situation. Then I will return back to this so that you will be able to understand. Let's say there are three products, X, Y, and Z. The capacity of A PLC's plant is restricted by process alpha. Now, if we look at this, the bottleneck process is identified. No need to identify which process is a bottleneck. So alpha process is a bottleneck. Process alpha is expected to be operational for 8 hours per day and can produce 1200 units of X per hour. So this is the production capacity per hour for X, 1500 units of Y per hour, and 600 units of Z per hour. Selling prices and the material cost are given. So if we subtract it, we will get a throughput per unit. Throughput or contribution, and we can even use a word throughput contribution, but I recommend to use only throughput. Some books related with the contribution, so that's why it is written throughput contribution, but in most of the books it is only throughput. So if the throughput or throughput contribution is used, no matter, you will get the same marks. But if you will use only contribution, this will not give you the marks. So to use the complete word or just to use throughput. So we will get the throughput per unit. Conversion cost. We know that conversion cost are material, other than material, labor expenses and overheads are known as conversion cost. And this is 720,000 per day. Calculate the profit per day if the daily output achieved is 6,000 units of X, 4,500 units of Y, and 1,200 units of Z. So we need to calculate the profit per day. So first of all, we will multiply throughput per unit with the number of units. So there are 6,000 units of X, 4,500 units of Y, and 1,200 units of Z. So if we will multiply we will get the total throughput for X. How much will be 4500 into 80? And what will be the total throughput from all products? And we have a total fixed cost of 720,000. So this is 1.02 million. So we will subtract it. We will get a profit per day as the data is on daily basis. So we will get the per day values. So this will be, I guess, 300,000. So the calculation of profit is very simple. The part A was related to calculate profit per unit. So the profit per day. So we will be having the per day production. We will simply multiply the throughput per unit with the number of units that we have produced on daily basis for each product. We will get the total throughput, and then we will subtract from the total fixed cost. We will get a profit. So this was the basically fourth line point, that the profit is a function of material cost and labor and other costs. Is it clear? This is a bit simple situation. No technicalities. This is just the basic calculation. Now the second part, calculate the TA ratio. TA ratio means throughput accounting ratio. So this is the main point to calculate throughput accounting ratio. So throughput, what is the formula for calculation of throughput accounting ratio? TPAR, throughput accounting ratio, is equal to throughput per hour divided by fixed cost per hour. So we need to have two things in our data, throughput per hour and fixed cost per hour. And how to find throughput per hour? Throughput per hour is simply throughput per unit divided by per unit time. If we look at the product X, the throughput is $70 given in the question. But I guess if it is not given, yes, given 70 is the throughput per unit for X. And how much time is required for 1 unit of X? If we look at the data, that 1200 units of X per hour, 1200 units of X per hour. So can you find the per unit time? For per unit time, we are not given with the directly data, but question says that 1200 units per hour. It means in 1 hour, we are producing 1200 units. So we will get the per unit time calculation. How much hours are required? In 1 hour, we are producing 1200 units. So this is your per unit time in hours. So this will be 1 divided by 1200. And we know that in the mathematics, division of a division becomes multiplication. So basically, we will get throughput per hour 84,000. You can even use your calculator and your answer will be in fractions and use that fraction to get 84,000. Please try everyone whether you are getting this answer and update me as well. I'm waiting for your response, please. Students, are you with me? Okay, I hope you get your understanding clear. So this is the your answer of throughput per unit for each product. So the first is throughput to calculate throughput per hour. And the other thing that we require is the fixed cost per hour. And the fixed costs are given to you $720,000 per day. I'm just writing the word with you for understanding that 720,000 cost is per day. And how many hours you have? 8 hours in a day given in the question. So what will be our fixed cost per hour? Because we are having the production time of 8 hours in a day. So the cost of 8 hours are 720,000. So we are having $90,000 cost per hour basis. So now we will calculate throughput accounting ratio. The formula is throughput per hour divided by fixed cost per hour. So there are three products. Product X, the throughput per hour is 84,000. And how much cost we are incurring? 90,000, which means that we are not covering our cost. Dollar will be cancelled out. So no dollar sign will be carried with the answer. The ratio will be in fraction. So what will be the answer of this? .93. Okay. For Y, this is 120,000 divided by 90,000. So here in this case, this will be we can use the word times as well. Or even we cannot use the word times. Now, what we learned, if throughput accounting ratio is greater than 1, what does it mean? Is there a profit or loss? Can you guess? If throughput accounting ratio is greater than 1, just like in the last two cases, can you guess that there is a profit or loss? Very good. There is a profit. And in a case when throughput accounting ratio is less than 1, it means there is a loss. Why loss? Because we are getting the lesser benefit as compared to cost. That's why we are having a less than 1 answer. And if we are having throughput accounting ratio exactly equal to 1, so we are at almost a break-even point, because break-even is a point where we are having no profit, no loss. Is it clear? So going back to the throughput accounting ratio theoretical area, in the first line you are given with the formula, then return per hour. The word return per factory hour or throughput per hour is the same thing. Throughput per hour. And these are the throughput accounting ratio greater than 1, less than 1. Is it clear? Please read these lines. I hope that you got your understanding okay. Is it okay? Can we proceed further? Okay, now look at this. If we want to have this at a stage of no profit, no loss, or even if we want to have profit from X, what we can do? We can do two things. The one thing is to reduce this fixed cost. How this fixed cost can be reduced? This fixed cost can be reduced by reducing your fixed expenditure, or another way is to increase your capacity. So under both cases, you will get a lesser answer. And if you will get a lesser answer, your ratio will automatically be better. Another way is to increase this amount, throughput accounting ratio. Try to increase throughput accounting ratio. Throughput per hour. Now, how you can increase throughput per hour? Either you can reduce per unit time or you can increase throughput per unit. So in order to increase throughput per unit, you need to increase sale price or you need to decrease material cost. So if the examiner will ask in how we can improve the throughput accounting ratio, then you need to read these points. If we want to improve the throughput accounting ratio, then we need to consider these measures. The measure 1, 2, 3, 4, 5. And what will be the result? If we increase the price, we will face a demand issue. Our demand will be affected. If we reduce the material cost, we may compromise on the quality or something else. Please read this paragraph and then ask if there is any question. So whenever the examiner will ask you that which of the following will improve throughput accounting ratio or which of the following will not improve throughput accounting ratio. So basically you need to conceptualize the idea that how we can improve throughput accounting ratio. We can improve throughput accounting ratio by increasing the sale price, by reducing the material cost, by reducing the per unit time, by reducing the fixed cost, and by increasing the total capacity of the department. So there are several ways to incorporate the improvements in throughput accounting ratio. Are these points clear to you? Is it clear? Please update me. Okay, let's go to example 3. I am skipping example 2 for the time being because the example 3 is more comprehensive. So it will be covering almost the 2 as well. A cake manufacturer makes 3 different types of cake: birthday cake, Christmas cake, and wedding cake. Each cake goes through the 3 processes: mixing, baking, and icing. So there are 3 processes, and we know the logical sequence of this, that it will be firstly mixed, baked, and then it will be iced. So the process 1, 2, and 3. Like many businesses, Seas faces tough competition from a mature market. The factory has 20 production lines. What does it mean? That the same thing is done at different locations in the same building. It means that we are doing this at the 20 places in the factory. So the 20 production lines mean 20 places in the factory doing the same things, same 3 processes. The processing capacity varies for each process, and the manager has provided the following details. So this is the processing time per cake in hours. A birthday cake requires 0.4 in mixing. Birthday cake requires this time in baking, and icing it requires this time. So I hope you are getting the format of the data. The cake factory is open for 12 hours a day, 6 days per week, and the factory closes down for 1 week in summer and for 1 week in Christmas. So basically there are total 52 weeks in a year, and it means that 50 working weeks, because there are 2 weeks off. So this is your total weeks, and 6 days in a week, and 12 hours in a day. So if we multiply all, we will get our total capacity in hours. How much? And remember to multiply the 20 as well, because there are 20 production lines. So multiply the 20 as well. So we will be having a total production capacity of this company. Is this after multiplication with 20? Okay, so 72,000 hours is the production capacity of each department: mixing, baking, and icing. And if we look at the data, we are given with the 3 products, 3 departments, and I hope that we have to find or to identify a bottleneck process. So I will be solving this here. That I need to identify the bottleneck process. And the bottleneck process, we know that will be a process which limitize on the production. If we select the data of the mixing, 72,000 is your total capacity of mixing, and you need, for one birthday cake you need 0.4 hours. It means that how many cakes you can produce annually per birthday in mixing department. So 180,000 cakes can be mixed for birthday cakes. Then what is the capacity of baking? How many cakes it can bake? It can only bake 72,000 cakes. And if we look at the capacity of the icing, what will be the capacity of icing? 90,000. So which process is a bottleneck constraint? The one with the lowest production capacity. You may check the same with the Christmas cake, with the wedding cake. I will give you 5 minutes. Please check at your end. If you calculate based on your Christmas calculations, what is the binding constraint? And if you will use the wedding data, what will be the binding constraint? Please calculate in the same way and then share your answer. That in case of Christmas, this is a binding, and in case of wedding, this is the binding constraint. I give you 5 minutes, please. So you are having the same binding constraint, whichever product you will use. So this is the assumption that we have at your exam level, that there will be the same binding constraint whichever product will be produced. Whereas in a practical environment, there might be a case that the bottleneck will be different. But for the simplicity, it is assumed at your level that the binding constraint will be the same in case of every product. So you need not to worry in the exam that it will be a different one. Is it clear? The first part of this question was that identify the bottleneck process. So we have done the part A, then calculate the throughput ratio. And we know that for ratio, we need to have throughput per hour, and then we need to have fixed cost per hour. And if I go through with the rest of the data, then we will be able to identify the cost and the throughput. Labor is paid at 7.5 pounds per hour. Material costs are 5 for birthday cake, 10 for Christmas cake, and 20 for wedding cake. Other factory costs are 200,000 per year. Selling price is 20, 25, and 80. Due to perishable nature, C carries very little inventory, and this is also our assumption that we will not be having inventories. So there are 3 cakes per day: Christmas and wedding. The sale price is given to you. Is 20 pound, 25, and 80 pounds. 20, 25, and 80. Direct material cost. The direct material cost is given 5 for birthday, 10 for Christmas, and 20 for wedding. 5, 10, and 20. So 5, 10, and 20. We will get the throughput per unit. This is 15. This is 15. This is 60. Now, if we divide the throughput per unit with the per unit time, we will get throughput per hour. Now, this is the data. We have 3 times for every product. We will now consider the time of the bottleneck process only. Remember this. We will not consider the other time because we have to find the throughput per hour. So definitely this will be throughput per binding hour. So we will be taking the time per unit time of every product, but for the bottleneck process only. So for birthday cake, it is 1 hour. One hour, 1.5 hour, and 1.6 hour. So we will be getting the answer. This is 15. And how much is for Christmas cake? This is $10 and this is 37.5. Is it clear? Now for the ratio, we need to have the fixed cost per hour as well. We are given with the two types of fixed cost. One is other costs, and other costs are given in total 200,000 per year. So this is the annual. Now we need the annual capacity. I guess we have already calculated the annual capacity as 72,000. So this will be 2.78 per hour. And we know that there is an other cost in the question, which is the labor. And if you look at this, labor is paid at 7.5 per hour. And we assume that labor is treated as a fixed cost. So the labor cost will also be assumed to be fixed. So this is 7.5 pounds per hour. So what will be our total fixed cost per hour? Total fixed cost per hour. $10.28. And if we have throughput per hour and the fixed cost per hour as well, then we can find the throughput accounting ratio. So the throughput accounting ratio for birthday cake will be 15 over, this is not the dollar figure, this is pound. So let me correct these figure as well. Please note it that the answer will be in pounds because the question is using the currency sign pounds. Now, what will be the answer of ratio for birthday cake? Please share the answer of the ratio for birthday cake. $1.46. So this, what will be the ratio for the wedding Christmas cake? 0.97. And what will be for the wedding cake? So the most profitable product is the wedding cakes, then birthday cake, and the loss making product is the Christmas cake. But in this question, we are only required to calculate the ratio. No need to comment. So this is the B part. Is it clear? Calculation of throughput accounting ratio. First of all, we will calculate the throughput per unit, then we will get throughput per hour. Then we will calculate the fixed cost per hour. Okay, moving to the next part. Explain how C could improve their throughput accounting ratio. As I told you earlier, that in every exam, examiner was used to ask this point, that how it can be improved. So we know that how it can be improved. This is theoretical answer. So I hope you will be able to write it after reading it. Then, should the C discontinue to Christmas cake? Now, this is the technical writing that you need to decide in this part whether the Christmas cake should be discontinued or not. What do you think? Please, everyone, share your opinion whether we should discontinue it or not. You may speak as well. If you do not want to write in the chat box, then you can speak it. Please participate. Okay, one of the reason I have received in the comments, and what others will say. Continue. Okay. Please mention the reason why it should be continued. If we compare it on per unit basis, it is not actually contributing in fixed cost, because there is the fixed cost of 10.28 and it is not even covering it. But I got your idea clear, your understanding with respect to other topic, that it is, although it is not contributing 10.28, but it is still contributing 10. So this is the logic that you feel appropriate. Okay, any other student? Two students are remaining and both of them are girls, so I encourage you to speak or to share your comment. Shaheen and Shabani, can you please share your opinion? Yes, instead of recovering anything, it is better to recover 10. So fixed cost will be fixed in either case, whether we will produce it or not. So we will not be saving the fixed cost. So it is better to cover 10 as well. If it is not covering the 10.28, so it is better to cover at least 10. Okay. But the main thing that I want to hear from you people was something else. Now I will discuss it. Apparently, as you know, that throughput accounting ratio less than 1 shows a loss. So we can write it as, although throughput accounting ratio for Christmas cake is less than 1, so it is not financially viable to continue with it, but we can continue with it because Christmas cake will be made and sold only at Christmas Eve, because we know that the Christmas is only one day or maximum for a few days. The rest of the years we will not be producing the Christmas cake. We will be producing the birthday cake and the wedding cake. So no matter if we are having a loss on one day, maybe a customer will visit us on Christmas day for a Christmas cake and he gets our product and he feels that the taste and the quality of the cake is too good, and when his birthday will come, he will definitely return to us. And when he will go to a wedding, he might buy the wedding cake from us. So Christmas, the frequency of the Christmas cake, the volume of the Christmas cake will not be so high that we need to worry about that this is making a loss. So what you learn it from it, whenever examiner wants your opinion, in this case, that if a product is having a throughput accounting ratio less than 1, then you will write both things. You will start in this way, that although throughput accounting ratio of this product is less than 1, which shows that this is not financially viable to continue. But if a customer who is buying this product might come to us for the next time to buy the other product as well, so we can rely on the other factors, other non-financial factors. So you can write the wording in your own wording, but the meaning should be like this. So you will continue from here, that it is probable that the customer who will be buying Christmas cake will also buy other cakes from us in future. So we can continue with it as its volume is not so high that it can affect our annual profits materially. Is it clear? So I suggest you to write in this way. Please respond. The example 2, you will do it by yourself. This was a simple example. You are already having with the data. These handouts, are you all having these handouts with you? At the end of the last class, I have shared all of you on WhatsApp when you requested the material. Now, in the next question, in the first part, we need to identify the bottleneck process and support the answer with the figures. So this is the question number 4, example 4. So please identify the bottleneck process. Read this question by yourself and then identify the bottleneck process. I'm waiting for the answer. Just identify the bottleneck process. You need to identify the bottleneck process, not the bottleneck product. The products are Baba and Bing, but the process are department 1 and department 2. So you need to identify the bottleneck process, whether it is department 1 or 2. Baba and Bing are two products. So read the question again and try again. Other students are also requested to share so that I can get confirmation whether it is department B, department 2. Okay, so I hope that the department 2 will be the binding constraint. Compare and contrast the marginal costing and the throughput accounting. So this is the comparison between marginal and throughput. We have already discussed this point in theoretical area. Then calculate the optimum production plan and contribution earned each day. Now this is the different scenario. Optimum production plan mean how many units of Baba and how many units of Bing will be produced. Now if we want to have a optimum use of resource, then we need to find the throughput per unit. If we look at the throughput per unit, we will subtract the sale price from material cost. What will be the answer for Baba? Throughput per unit. And the answer for Baba will be 45 minus 8 will be 37. And for Bing, it will be 50 minus 17.5. What will be the answer? $32.5. Okay. Now, what is the throughput per unit? Throughput per unit is this one. And now we need to convert it to throughput per hour. Our data is given in minutes. So in the binding constraint, The time is 18 minutes. So we will get the throughput per minute. Please share the answer. Throughput per minute. If the data will be in hours, we will get the answer in hours per hour. But now the data is in minutes, so I will use the minutes. And which department minutes I need to use? I need to use the minutes or the time of the bottleneck process. And the bottleneck process is the department 2. So this is 2.06 and this is 2.71. So this is your per minute throughput. And if we look at the data, which product is giving us the more? The second one, Bing. So this is our first priority and this is our second priority. It means that we will go for the production of the product which is generating more benefit using 1 minute of the department. So per minute benefit is more in case of Bing. So Bing will be our first choice. And how many minutes are available? It is given in the question that how many minutes are available. $972. I'm not getting where it is. Is it clearly written somewhere? Or you have calculated 972? Okay, it is below. Okay. Yes. Yes, 972 minutes are for department 2. Now, I need to look at whether there is some demand for the Baba and Bing. So the demand is not given. So I assume that I will use all of these minutes to produce only Bing. So how many Bing I can produce? 972 divided by 12 minutes. Then how many units I can produce? 972 divided by 12. So I will use the whole time for producing Bing because Bing is generating more benefit to me. So I will produce 81 units of Bing and no units of Baba. Is it clear? So what we learned that what we need to do, we need to calculate, first of all, we need to calculate throughput per unit. Then we need to calculate throughput per hour. And then we will rank our priority first, second. And if there is no restriction that related to demand, then we will use the whole time to produce the product which is at the first number. And let's say the question restrict that we can only sell 60 Bings. We cannot sell more than 60 units of Bing. Then no need to produce 81 because there is a demand restriction. Then in this case, first of all, we will produce 60 units of Bing. I am assuming this by myself. So what I am assuming that there is a demand restriction, that the demand of Bing will be 60. So in this case, we will not be producing 81. We will produce 60. And how many minutes will be used? Because the 12 minutes are required for 1 unit of Bing and we will produce, so 720 minutes will be used. And how much time we have? 972. And what is the balancing time? How many minutes will be available? And we will produce Bing in this time. 252 minutes available. And we know that for one Baba, we need 18 minutes. So we will divide 252 with 18. We will get the number of units of Baba. The first 60 units will be of Bing because it was on the first priority, and the remaining time will be utilized for the second priority. Do you get your understanding clear? Mahesh, Shaheen, and Shibani all are requested. Yes, 14 units. So this was your requirement. Calculate the optimum production plan and throughput each day. But in this question, we have calculated that the 81 units will be produced. So we will multiply the 81 with the throughput of the Bing, and the throughput of the Bing is already calculated. So we will get the total throughput. Then at the end, we need to calculate the throughput accounting ratio. And for a ratio, we need to have fixed cost per hour as well. So can we get the fixed cost per hour? Labor will be assumed to be fixed, variable overheads will assume to be fixed, and we will get the fixed cost per hour. Fixed cost for the year. This is given in total. No need to sum up. Fixed overhead for the year are 250,000 per year, and it is absorbed based on the labor time of the department 1. And the department 1's time is given 1440 per 1440 minutes. Is it clear? Now read the example 5. Contribution per unit is given for the 3 products. Sales demand is given. There are 3 machines used for manufacturing of these products. Details are given. Machine 1, machine 2, and machine 3. Now these machines are treated as a department. And these are 3 products, product X, Y, and Z. Can you identify which machine is a bottleneck resource? And each machine has 1600 machine hours. (1600) divided by 6. How many units can be produced? 1600 divided by 9, and then 1600 divided by 3. We will get the production capacity for each machine for product X. I guess that the machine 2 will be a bottleneck resource. Please confirm. Okay. Machine 2 is a bottleneck resource. So here it was the question marks, and what it was? Bottleneck machine hours. When you have identified the machine, which machine is bottleneck, then for X we will use 9. For Y we will use 3. and for Z we will use 1.5. So that's why there was a question mark that the student will fill this space. Once you have identified your bottleneck, then you can fill these places. Is it okay? Then calculate the throughput accounting ratio. Can you calculate it? The word here, it is contribution. So I assume that this is throughput. No need to get yourself confused. This is throughput because no other data is available. I cannot calculate the throughput with any of the data provided to me. So I assume that this is throughput contribution. This is not the traditional contribution. Please calculate throughput accounting ratio of each product, and I suggest to share the complete solution in WhatsApp group. The group was created. With the name PM September session. Share the complete solution so that I can get the way you solve it. Students, are you doing on it? If you are stuck, then update me so that I can solve and move on. And if you are trying, I can wait. Okay. You are not able to find the fixed cost. Let me read it. Yes, fixed cost is missing. So I will solve it up to the extent it can be solved. This is contribution per unit, and we have identified that this is 9, this is 3, and this is 1.5. So we will convert this to throughput per hour. What will be the answer? 12 divided by 9. 1.33. Then 10 divided by 3 will give us how much? 3.33. And then 6 divided by 1.5 will be 4. So this is throughput per hour, and the fixed cost per hour are not here. We can assume any fixed cost. Let's say the fixed cost are 2000. I assume that the fixed cost are 2000 in total, and there are capacity is 1600. So what will be the fixed cost per hour? 2000 divided by 1600. I assume this figure because there is some typing mistake in the question. Fixed costs are missing. 1.25 is the fixed cost per hour. Now we can calculate throughput accounting ratio. It will be easy now. Is it okay? Just need to divide throughput per hour with the fixed cost per hour. Is it fine now? Okay, before moving to CVP analysis, let's go to the practice kit. You can take a 5-minute break. Meanwhile, I will open the practice kit. Then after that, if we will be having time, then we will move to CVP analysis. You may take 5 minutes break. Meanwhile, I am opening the practice kit. I hope you are back. Are you? Are you back? Okay, question number 55. When demand exceeds supply, which of the following situation would increase the throughput accounting ratio? An increase in the speed of the fastest machine in production process. Speed will not affect the ratio. So this is not the relevant in any case. An unexpected increase in the factory rent. So if there is increase in rent, it will increase the fixed cost. So it will not improve the ratio. A 5% wage increase linked to an 8% improvement in productivity. What is the meaning of productivity? Means you will be producing units more quickly. So it will increase the efficiency. As the efficiency is 8% and increase in wage is 5%. So this will improve the ratio. So this is likely the answer, but before finalizing, let's read the D as well. A 10% sale discount to the estimated demand by 20%. This will reduce the ratio because we will be having the lesser value of the sales. So C is the most appropriate answer. Is it clear? Moving to next question, a manufacturing company decides which of the three mutually exclusive product to make in its factory on the basis of maximizing the company's throughput accounting ratio. Sale price is given, material cost is given, machine time is given. Total factory cost excluding material are 150. The company cannot make enough of any of the product to satisfy the external demand. What would be the effect of the following actions on the company's throughput accounting ratio and increase the selling price of the product Z by 10%. So if there is an increase in the selling price, it will improve the ratio. Increase the selling price of Y by 10%. We need to look with the reference of Z products. Calculate it. So let's calculate it. Then this is your product X and this is per unit time. It will be $6 per hour. 40 over 20, it will be $2 per hour. 20 over 2.5, it will be how much? First of all, we will get the throughput. Throughput is 20. This is 30. And this is 4. Then we will divide it with the time. We will get 2. 30 over 20, we will get 1.5. 4 over 2.5, what will be the answer? We will get throughput per hour. 4 over 2.5. This will be 1.6. So this is your current situation. As question says that the products are mutually exclusive. Mutually exclusive mean we need to go for one product. So we will go for the one which is generating the highest. So we will be producing only X in case of mutually exclusive. Now, if we look at the first condition, increase the selling price of product Z. If we increase the price of Z, price will be 22. We assume that there will be no change in the material cost. So this will be 6. Then your time is 2.5. What will be throughput per hour? What will be throughput per hour? 6 divided by 2.5. If this is 2.4, it means it is shifted from 1.6 to 2.4. So throughput accounting ratio will improve. Because if we are having more throughput per hour, we will get a better answer. Now, increase the selling price of Y by 10%. Now look at the Y. The new selling price will be 44. Minus 10 will give us 34. Then we will divide it with 20. What will be the throughput accounting ratio? $1.7. Now, is it improve the throughput accounting ratio? No, because we are already having the best one 2. In the previous situation, our best was 2, but now our best was 2.4. So we will shift to product Z instead of X. But here in the second situation, our X will be the best one. So in this case, throughput accounting ratio would not improve. We will be in a situation of X because the products are mutually exclusive. Are you getting the point? Third one, reduce the material cost of product Z. Product Z, this is material cost, 16. Now the price is 20. And if we reduce with 5%, what will be the new material cost? If the 5% will be reduced, what will be the new material cost answer? 15.2. And the throughput will be 4.8. And if we will divide it with 2.5, what will be our throughput per hour? This is 1.92. So again, X will be better because X is generating 2. So this will not improve the company's throughput accounting ratio. And in the fourth option, reduce the material cost of Y. Now, the price of Y is 40. If we reduce the material cost of Y with 5%, what will be the new? 9.5. This will be 30.5. And if we divide the 30.5 with 20, what will be throughput per hour? 1.53. Again, our X will be preferred. So the first one was able to shift our product from X to Z. Rest of the 3 options are not shifting the product. So they will not be affecting the company's throughput accounting ratio. Please share if you have any confusion. Is it clear? Can I move? Okay. Sky Limited operates through an environment where the product goes through the two processes, process P and process Q. There are 8 machines operating at 90% capacity. Each machine produces 6 units per hour. So we will get the per unit time. In process Q, there are 6 machines operating at 85% capacity, each machine producing 9 units per hour. Sky Limited produces the cloud, which is not popular product. The marketing manager has therefore decided to apply a price discount of 15% on the selling price of $20 per unit. The material cost per unit is $5 and the direct labor cost per unit is twice as that of material. It currently takes 0.2 hours and 0.3 hours to make unit of the cloud on the machine in the process P and Q respectively. So this is the per unit time. What is the cloud's throughput per hour? So before going to throughput per hour, we need to find the bottleneck. Which process is a bottleneck? Bottleneck process is a process which limitize the production. So if we look at the process P, there are 8 machines working at 90% and producing 6 units per hour. So it means 8 into 6, because the work is done at 8 places, 8 machines means 8 production lines, and they are not operating at 100%, they are operating at 90%. So from process P, we can produce 43.2 units per hour. In total, we can produce 43.2 units per hour. And for process Q, there are 6 machines. So 6 into 9, but they are not operating at 100%, they are operating at 85%. What will be the answer in this case? 45.9 units per hour. It means our process P is a bottleneck. And now we need to calculate the throughput. For throughput, we need to have the sale price. The sale price was originally 20, but it is giving a 15% off. So 85% will be your price. What will be the 85% of 20? 17. Then direct material cost. Cost per unit is $5. So we will get a throughput per unit. 12. And how much time this product requires in Q? In P, because the bottleneck process is P. Per unit time. The per unit time is given 0.2 hours. So what will be the throughput per hour? 12 divided by 0.2. 60. So 60 will be the answer because throughput per hour of the bottleneck resource was the requirement. Is it clear? Now, moving to the next question. Units produced, time taken, maximum time available, material purchased, material used, labor cost, overhead, sales. Which of the following is the throughput accounting ratio of the product? So we first of all, we need to calculate the throughput accounting ratio. Sales 9,000 and the material cost. The cost of material was given 3,000. So the throughput per unit will be not per unit. The throughput in total will be $6,000. And if we go for the labor cost and the overheads, we will be having a 3,500 as a fixed cost. Do we have per unit time? We are given with the total time. So if we divide it with 200, what will be our throughput per hour? $30. And if we divide the fixed cost with the 200, what will be our fixed cost per hour? $17.5. And if we divide 30 with the 17.5, what will be the throughput accounting ratio? $1.70. So this will be the answer. Because the throughput was given in total, so we divided with the total time. If it was given per unit, we divide with the per unit time. But here the data was given in total, so we use the total figures. We took the total hours and we get the throughput per hour and fixed cost per hour. I hope the question is clear. Question number 59. A manufacturing company uses 3 processes to make its 2 products, X and Y. The time available on the 3 processes is reduced because of the need of the preventive maintenance and rest breaks. These are the 3 processes, 1, 2, and 3. Hours available per day, hours required to make 1 unit of X and 1 unit of Y. Which of the following will improve the throughput? Daily demand for the X and Y is 10 units and 16 units respectively. Now there are 4 options and you need to assess which of the following will improve throughput. And we know that throughput is equal to sale price minus direct material. So this is throughput. The option A is saying that increasing the efficiency of the maintenance routine for the process 2. So if we increase the efficiency means we are doing it in a better way in a shorter time. So we will ultimately save our time and we will get a better throughput per hour. If we move to the option B, increasing the demand for both products. If there is increase in demand, there will be no effect on the throughput or throughput per hour. So B is not the relevant option. Reducing the time taken for the rest of the break. If the time will be reduced, it will destroy our ratio. It will not improve our ratio. Reducing the time product X require for process 1. Now the tie is between A and D, because if we reduce the per unit time, we will have a better ratio, better throughput. But first of all, we need to identify whether the process 2 is a bottleneck or process 1 is a bottleneck, because we need to consider the bottleneck process. So if we identify which process is a bottleneck, then we will be able to take the right answer, because in option A and D, both will be a result of improvement in throughput accounting ratio or throughput. But first of all, we need to identify from this data that which process is a binding process. So if we took the product X, department 1 has 22 hours and X need 1 hour in department 1. So the 22 units can be produced. And if we go for the department 2, 22 divided by 0.75. What will be the answer? $29.33. So what do you think? What is the answer? One option is D and one option is A. So if we go for the process 3, we took X as an example, 18 over 1. So if we go for the process 3, then overall process 3 will be a bottleneck. But I don't know why he is not using the process 3 in A and D, because in actual the answer will be based on the overall processes 1, 2, and 3. And if we take product Y, if we take Y, then the process 1 will be 22 over 0.75. Then process 2 will be 22 over 1. And process 3 will be 18 over 0.5. Can you please share the answer? 29.33, 22. And this will be 36. Now, if we took Y, we will get that process 2 is a binding constraint. So basically, there is some error in the question, because we know that at the starting of the lecture, I told you that you will be provided with the data that is having one binding constraint. Do you remember the question of cakes? So if we took X, the binding is process 1, and if we took Y, binding is process 2. So this is not the right question. So there is some mistake in the question. That's why it is confusing that whether answer is A or D, because if we look at the solution, the answer is A. That's why I did in the other way to satisfy myself why we are not reaching the solution, because there is some mistake, and this mistake is proved with the help of this calculation. So there is some error. If the error is removed, then our concept will be okay. So if this type of question will be asked in exam, then it will be thoroughly prepared and there will be no error. Then you will confidently tick the right answer. Is it clear? The solution of this question is option A, but we are, as per our concept, we are reaching at D. And in order to get the clarity, I solve the second option. And when we find out the second option, then bottleneck is process 2. And if the bottleneck is process 2, then A will be the answer. So here in this question, the both A and D are the right option. That's why I circle both options. And I leave up to you that what you need to select, because in every angle, one statement is true. If the process 1 is a bottleneck, then D is true. And if process 2 is a bottleneck, then A is true. Is it clear? Okay. Which one of the below statement is not true? So we need to find the wrong statement. Can you make a guess which of the following is not true? Seems easy question. Yes, D is the right answer because there is some little changes. This is basically the production management technique, not the decision making technique. So D is the right answer. Which of the following is a definition of the throughput accounting ratio? This is also the easy question. Please give your opinion. Question number 61. Yes, very good. C is the right answer. Question number 62. A company has recently adopted throughput accounting as a performance management tool. The results for the last months are shown. Units produced, units sold, material purchased, opening inventory, labor cost, overhead price. There was no opening inventory of the finished goods and the closing inventory for the material. Which of the following throughput accounting ratio of the product? So we need to find the throughput accounting ratio. In order to find the throughput accounting ratio, we need to divide the throughput per hour with the factory cost or the fixed cost per hour. First of all, we will calculate the throughput. 35 is the per unit price and the units are given. So we will get a revenue 800 into 35. What will be the revenue? $28,000. Then we will subtract the material cost. We will get the throughput. So this will be 15,000. This is your throughput. And if we add the other costs, labor plus overheads, what is the total of labor plus overheads? 11,550. And if we want to convert it into hours, now hours are not given. If we look at this data, is there any number of hours given? It means we can directly divide it. We will get the same answer. Because the hours are not given, then in this case, we can directly divide with the total answer. You can do the same with the previous example in which we divided with the 200. We divided the both figure with the 200. If we will not divide with the 200, we will get the same ratio of 1.7, I guess. In the previous question, the ratio we have calculated was 1.7. So whether we will calculate with the help of total or per hour basis, we will get the same ratio. So in this case, C option will be the answer. Is it clear? I can give you the clarity with the help of the previous question as well. If you look at this, the opening inventory, this cost is not used because we know that we assume that we will not hold inventories. In the previous question, we have already ignored some inventory cost. So no need to consider the inventories. We will take the total cost of the materials purchased during this period. No need to consider the cost of opening or closing inventories because we assume that throughput accounting system will be following the just in time. For your clarity, if I move to the previous question, I guess it was this one. If we ignore the hours, previously we have taken the hours. But if we now look for the revenue minus 3,000 material cost, we will get the 6,000 as the throughput in total, and this is 3,500 in total. Now with the same concept, that divide it directly. Previously when I solved it, I used the throughput per hour and fixed cost per hour, and at that time I get 1.7. I hope it is now again 1.7. Just confirm it. So if the hours are not given, do not get yourself confused. You can simply divide the total throughput with the total conversion cost or total fixed cost, because when we divide this with the 200 and this with the 200, because we know that we need to divide with the total capacity, so we will be having the same answer in terms of ratio, because the concept of ratio is that whether it is calculated on per unit basis or in total, the answer of the ratio will be the same. This is our basic mathematics concept. That's why in the question number 61 or 2, whatever the question was, I simply divided those figures. So the examiner can also write the formula for throughput accounting ratio as throughput in total throughput divided by total fixed cost. This will also give you the same result. This topic was very interesting as well as the important topic, because in every exam, examiner asks for the concepts of throughput accounting, sometimes only to identify a bottleneck process, sometimes to find the throughput accounting per hour, sometimes throughput accounting ratio, and sometimes which product is to be preferred. Then we need to have the ranking. Ranking can be done on the basis of ratio as well as on the basis of throughput per hour. So it is up to you whether you will rank the products based on throughput per hour or you rank on the throughput accounting ratio, because the throughput accounting ratio and the throughput per hour will be giving the same ranking, and then as per ranking we will be producing just like we did in the question of Baba and Vin. So this was almost the end for the today's class. In the next lecture, we will be starting our next topic of CVP analysis. As I dropped here, that before moving to the next, we will go for the kit practice. I hope the topic is clear. And now I request all of you to ask questions related to today's class or any other previous class. If you have any question, then please ask. Okay. What about others other than Bhaskar? I hope there is no question as you people are not responding. Okay, you have the whole week for your practice and reading. You will do it during the week, and if you face any problem, you may ask that problem in the group or with me directly on WhatsApp. I will be there for your support. Okay, if there is no question, then take care of yourself. We'll see you in the next week. Bye bye.